Electric pickup trucks are a vehicle type that has not made it to the consumer market in any sort of large scale, but Lordstown Motors is attempting to change this with their endurance pickup truck. They've made tons and tons of bold claims saying that it's going to be the world's first all-electric commercial pickup truck. And they've talked pretty extensively about the features they wish to bring to market, such as their all-wheel drive that features 4 independent hub motors, which is dramatically different from most EVs we see on the road today. It's a striking design, and they've made a lot of bold claims, as well as been very active in social media and just had a great online presence in general. There really was a rosy picture being painted when you looked at their huge factory, all these videos of assembly lines running and doing different tasks. It looked pretty promising, and they kept saying they were on schedule, that they had quite a good amount of pre-orders, other things like that. I actually did a video fairly recently about Lordstown Motors and their ride stock. I discussed a lot of things about the stock, and the big thing for me was I thought they could definitely be a good competitor, assuming they could actually get these things built and sold. However, recently, Hindenburg Research, which is a short-selling firm that has gained a lot of notoriety, especially recently with their huge reports they issued against Kandi and Nikola, has released a report on Lordstown Motors. Their Nikola report was pretty extensive, and they're the company that actually showed and found out that Nikola was just pushing a non-functioning truck down a hill and then lying about it. The report goes through tons and tons of details. It spawned an SEC investigation, and it actually resulted in the founder of the company, Trevor Milton, leaving completely, as well as being sued by tons and tons of different individuals. It also killed the huge GM deal that Nikola had and looked like it was in the bag, but they completely axed it once all of this came out with evidence backing it. Another notable report they released was about Kandi Automotive, which is a Chinese manufacturer of small electric vehicles that was actually hoping to come to the US. Hindenburg dug up a lot of different information from them, showing tons and tons of their cars just sitting in these huge sort of wastelands not being used, perhaps made just to game the government incentives in China. Tons and tons of same-party trades and deals, other things like that. Kandi did come out against this report, but they really did not have a good explanation for a lot of the questions brought up here. And that has really been the story of Hindenburg Research. They have come out with a lot of reports that have been incredibly accurate, and they've really tempered the stock price for tons of these companies. We can look at Kandi and see the huge pumps they've had with all this EV hype, and then obviously Hindenburg reports really tempers and axes down the stock price. Nikola had a similar ordeal, but it had really been falling for a while, but those peaks were really killed by that report. So they've built up quite the reputation, and now they've released one on Lordstown Motors. This is something I want to talk about and go through because I actually talked about Lordstown Motors a good amount in a recent video. And my big point was that if they could actually get a product released and sold, I think they would probably do quite well. There really are no other options for electric pickup trucks. It was an interesting, different design. They had a huge factory set up, all of these other things. And the price they were offering at was actually fairly comparable, especially for something that does not have the same maintenance and costs associated with it as an internal combustion vehicle. But my biggest concern was just that they could actually start building the things at scale. I said it a million times in the video, and if you've watched that, you're probably going to hate hearing it again, but execution risk is a very real thing and a very important metric whenever you're dealing with a company like this. One thing I'm not a fan of is these companies going public without having sold a single product, and Lordstown went public via a SPAC. And of course, they are not producing and selling products. They're not a profitable company yet. But from what I saw, I definitely thought they could be a good market contender, especially in this work truck space, because you need to realize that self-driving technology just keeps getting more and more money and research dumped into it. We keep getting closer and closer to it every single day. But when it comes to work vehicles, they're not necessarily going to be used as a direct commuter. This is probably going to be a space that is going to be one of the last to be fully autonomous, because if you have a work truck, well, you're going to be using it for work tasks. You're going to have workers in and out of it. It's not just a commuter vehicle, which will probably be the first thing to be fully automated. If you like this sort of content, I would highly appreciate it if you like the video and subscribe to the channel. If you want constant notifications, just click the bell in the corner. I really appreciate your viewership, so thank you. And the US really is a truck-dominated market. Trucks sell like crazy here. For number one, we see the Ford F-Series. Number two, Chevy Silverado. Number three, Ram pickup. And if we keep going down the list, we have these large SUVs as well, which are crazy popular. And that's what's dominating the US. So I thought that was one thing that was pretty convincing about Lordstown, especially compared to a lot of these other electric vehicle startups that are trying to sell these really small electric commuter vehicles, which really is not a huge market in the US anymore and has been declining year over year. And additionally, I think there's a major concern about having a non-autonomous small commuter vehicle, since we do risk robo-taxis actually becoming a thing in the next few years. So jumping into a huge vehicle market, trucks, that is a great idea if you're manufacturing in the US. Focusing on a segment that is likely to not be automated very quickly, another fantastic thing. You know, people are using these for work. Plumbers carrying stuff, gardeners moving equipment, things like that. And the videos they released of all the welding bots going through, testing the waters, building all of these things, it looked pretty nice. Although, again, I had to reiterate, execution risk. If they cannot get up to speed with manufacturing, it is going to be the end of the line for them. And the reality is, getting large-scale manufacturing is very difficult. I'm an engineer in the manufacturing space, and it is an absolute pain in the butt. It's very capital-intensive, and it's very hard. You know, that's why when you see a lot of startups like Tesla, they start with the high-end market where they're making a lot of vehicles that are almost handcrafted. There's a lot of manual labor being involved in that. But Hindenburg Research released this report, and I'm going to try to go through some of the big points. They reiterate that Lordstown is a SPAC with no revenue and no sellable product yet. I'm not sure I'd say they misled investors on that. What they showed were prototypes, and at least in the videos I saw, they always mentioned they were prototypes. But they are correct in that they're not selling any products yet. They're saying they're going to be the first to market with an electric pickup and have been giving a lot of progress updates, but you can't just buy one yet. They also talk about the pre-orders basically being fabricated or fake. And this is an interesting point because they actually talked with former employees, business partners, and tried to look up some of these companies that pre-ordered, only to realize that one of these was based out of a small residential apartment and doesn't actually operate a vehicle fleet at all. Which, why would this fake firm basically pre-order all these vehicles? It does suggest that Lordstown may have fabricated these, may have had a friend or someone create this to make artificial pre-orders. And again, a lot of these pre-orders came from these small startups that really they don't have an office, they don't exist, they're a fake company. They don't have a mailing address, they don't have employees, they don't have vehicles. And that's a lot of their big points. They really talk about how fake many of the pre-orders are and how fabricated they appear. And some litigation does suggest that Steve actually did this when he was CEO at Workhorse. So that's pretty rough. But for me, that's not even the biggest concern. I always think it's wrong when investors are misled. And if they truthfully did go out of their way to fabricate pre-orders for a number to show, that is really disgusting, and that would make me lose tons of faith in the company. But the even bigger concern I have is not just the pre-orders. I think their product definitely has quite a bit of potential if they can actually make it and start selling it. But the other half of this report is almost exclusively dedicated to missed deadlines and constant engineering changes, things like that. How the rosy picture painted to investors about being the first electric truck on the market might not actually be true. They talked to a former employee who said they were experiencing tons of delays and making drastic design modifications, putting them years away for production, which that's a pretty bold claim. I would be curious if that was actually a manufacturing employee or what. It's really hard to make an assessment like that on your own. You know, companies pay tens of thousands of dollars to research things like that. So I guess it's a ballpark, but it is pretty rough. And if they really slow down on this, if they're not first to market, or if they're years behind market, that's really going to strangle them, especially with the lower share price right now. It's going to be harder to raise capital. Talks about the battery pack manufacturing, which, again, super important for an electric vehicle. Most of the importance of an electric vehicle is going to come from battery cost, availability, function, reliability, all of that. That's really the heart and soul of an electric vehicle and the difficult part of bringing them to market. There's also claims that they didn't complete any of the testing and validation for cold weather, durability testing, other things like that, which are obviously required if you want to sell a road vehicle. If they're behind on that, they're really going to get stuck in red tape, and it is going to be very rough for the company. They also mention how one of the prototype vehicles burst into flames. For me, that's not as concerning. It's obviously a concern if you have an employee in it, and it's not a safe operation, especially when you have it on public roads. But again, they're not selling any vehicles yet, so if they're doing early testing and having complications, it's not necessarily the end of the world unless it is a huge problem that is going to hold back manufacturing. And they also point to all the stock dumped by inside investors, which is kind of concerning. You think if they had an optimistic view of the future of Lordstown, they would not be dumping tons and tons of stock. They would be trying to get as much as they can get their hands on. So these are all the claims. Some of them have a lot of evidence backing them. Others are sort of just hearsay from previous employees, but could have a lot of credibility if they track down legitimate employees. Keep in mind, former employees might be biased towards being disgruntled with the company. The report is very extensive, as Hindenburg always is. They provide a lot of information, and they go through all of this. Some of the early showcases of the plant, everything like that, and they do actually split it up to parts, so if you're just interested in the order book or other things like that, there is tons and tons of information. The CEO, Steve Burns, was very active on traditional media as well as social media. They go into detail about tons and tons of things here, the actual non-binding letter of intent, things like that. The investor deck using that 100,000 number, which is a pretty big concern if you're having an investor communication. And the paying for pre-orders is definitely a huge concern, especially when they're free. It gets kind of crazy. And if you hold this stock, I would highly recommend you look through this report. Again, it's very detailed. A lot of what Hindenburg does is they find solid evidence. In other cases, they try to find maybe less solid points, but bring up legitimate questions. Because if the questions are legitimate and they look bad for the company, well, CEO is not going to want to answer them because those could be used in court against him, unless they're blatantly false, in which case you should be more than happy to say they're wrong. It just keeps going on, and it is a long, long report. And at the bottom, we see Hindenburg's famous question list. In this case, they have 21 for the company. And as we can see, the stock has taken a massive hit. I mentioned this a lot when talking about Lordstown Motors before all this. This is not a profitable company. They are not selling a product yet, so an asset like this is going to be very, very volatile. But even this is very intense, and it's likely going to stay suppressed for a while until we get more clarification on what exactly is happening at Lordstown Motors. The CEO of Lordstown did actually respond to this report, and there are a couple articles and video interviews about it, and they did confirm that they do have an inquiry from the SEC. The SEC is taking a look at this, and it's possible they could end up under investigation. Depends how far they're going to go with it. Keep in mind, you can submit tips to the SEC, and whenever short sellers make a large detailed report, it's very likely they have contacts at the SEC that they provide this to. Not to insult members of the SEC or anything like that, but oftentimes they do not go after these big syndicates or big fish unless they have their hands held and all the information handed to them. They tend to just go for what is easy. That's a common criticism of the organization. But when someone else does all the research, makes it public, and provides you with tons and tons of information and contact info, then it's a lot easier. And that's why you see SEC investigations after short seller reports, not beforehand, because, well, they really don't investigate much. CNBC actually did have an interview with the Lordstown Motors CEO right after this, and he gave some insight on his answers. I'm going to play a small clip here at an accelerated speed and getting some perspective on what the CEO is saying.
Let's be clear here. The way that you have characterized your pre-orders or reservations in the past, I mean, you called these on CNBC serious orders. Now, people would look at this and say, if you have a company that's not putting down a deposit, that doesn't have a fleet, but basically are collecting letters of interest, are those truly serious orders?
Well, no, Phil's always been very clear, right? These are just what they're intended to be, right? These are non-binding letter intents. They're called pre-orders out in the kind of real world. So always classified them for that, and we have a lot of those pre-orders. I think, we have pre-orders directly from fleets. We have pre-orders from people that sell to fleets because that's the way fleets buy. Fleets don't buy in general, they don't buy like consumers buy. They buy through intermediaries. And so all we've done is gone out, gauge interest, because you got a tool to build something like this in an automated fashion. We're going to build one of these every 6 minutes. We kind of have to know how to tool, and you got to know about a year in front of your building. So that's what everybody uses pre-orders for. They are always, by definition, non-binding, no money down, cancelable. I mean, that's the nature of EV startups trying to gauge interest.
I understand that, Steve, but some people would look at this and say, look, you were far more aggressive in characterizing those pre-orders as true commitments, that you have company XYZ that has said, yeah, sign us up for 5,000 or 6,000. Do you regret the way you characterized those reservations?
Well, reservation, Phil, all I can tell you, I don't want to get into the specifics. All I can tell you is demand is robust. We've never said we had orders. We don't have a product yet. By definition, we can't have orders, right? So when you're early and you're years away from a product, in this case 1 year, and now we're down to 6 months. So now that we have the betas, we are starting to be able to shore some of that up. But the pre-orders did exactly what they were supposed to do, gauge interest. Nobody knew if fleets would buy an electric pickup truck, right? It was completely unknown science, no data around it. So we queried them. We have very robust interest, and that's just what they are. They're letters of interest. You can't do any more of that in this stage. So I don't think anybody thought that we had actual orders, right? That's just not the nature of this business.
So it's definitely an interesting situation, and investors, unsurprisingly, are suing. I've mentioned this a lot of times. Whenever you see a large stock drop, especially based off reports or other talks, you're going to have big law firms coming out of the woodwork trying to make money off it. That's kind of the reality of the market. But all of this obviously is kind of concerning, and it does make one wonder about the future of Lordstown Motors. It's going to be far more difficult to raise capital at this share price, and I would not be surprised if it stays this low for quite a while. A lot of faith has been lost in the company, and while we did get some responses from the CEO, there was really not an answer to those 21 questions that Hindenburg provided. And that's pretty sad to see. I think before we see any sort of recovery, the important point is going to be that Lordstown needs to start producing and selling vehicles. If they go past their due date, I can see things getting pretty rough for them. They're already probably limited on capital because, again, their share price is quite low. But if they can get their product out to market, deal with that execution risk, then I wouldn't be too surprised if they actually can achieve a good amount of orders. However, if the SEC investigation is showing that they did fabricate a lot of these orders, well, they could be facing a lot of fines, complications, and other problems. They're kind of in a pit right now, and they need to do a lot of things if they actually want to recover from this. It's unfortunate since they seemed like one of the more promising companies actually having a factory and all these updates, but if those updates are lies, they don't amount to much. We'll see where things go. Personally, I never like to see companies fail, but if these allegations are true, it is looking quite bad for the company, at least right now. If you're interested in investing in the market with self-directed trading, a fantastic way to start is with Webull. If you sign up now using my referral link in the description of this video, you'll get 2 free stocks valued up to $1,850. And these stocks are selected from companies like Facebook, Starbucks, Snap, Google, Procter, Gamble, and more. All the money in your account is yours to invest, trade, and withdraw as you please. There are 0 fees associated with depositing money. You just get your stocks and you'll get your buying power immediately. So if you want a fantastic brokerage with mobile, desktop, and web trading, just use the link in the description below.